Hi guys, welcome everyone. This is our part 101 in terms of how to use stop loss and how to take profit on ThinkorSwim, right? So I will just quickly show you guys how to set it up on ThinkorSwim. Uh, you could do it both on mobile and on your platform. So for example, let's say you get a call out from any one of us and you want to take it closer to in the money, right? Or whichever, doesn't matter, because in the money has more probability to making profit compared to if you're far out the money, right? So this is something you always have to look into, right? On this top chart here. So every expiration has a implied volatility added to it. As you can see on top, it says implied volatility. What we need to focus on is how does implied volatility impacts the pricing. It's already calculated into the system, but what you guys really need to focus on an average day or by June 5th next week, Apple is expected to move $10, which is plus minus. Either it could go $10 down or $10 up. So if you go too far out the money, right? So today is at 319 or 317, you would say, right? That's like a ballpark number. So if you calculate 10 below, it would be 300, about 307, right? This is the 10 move, right? $1 less, $10 less. And then if you go up, obviously from 317 or 318 to a $10 move would be somewhere around this, right? So look, if you see the volume here, I will show you guys how to add and remove some of the custom information, the important stuff that you guys need to either see the volume, obviously the open interest, and also how does the implied volatility or news calculates into the pricing of options, right? So I'll take a quick pause here. I'll open it up for you guys to ask me any question before I start digging into it further, and I'll show you guys how to set up the the option chain and all that other stuff. Any questions before I move on?
No questions.
Typically, when you either on the phone or on your laptop, right? What it does typically shows you, this is a generic, right? This is system default. So let's take today's option, right? So since already expired, we could also look at, so today's expected implied volatility was $1, which is about 9.42%. This is a system default. So typically, when you come into the screen, you should be able to see this panel view. It shows you, last net change of the pricing, bid and ask. Obviously, bid if you want to sell, ask if you want to buy here, right? And then obviously this is the put side. What you can do to set it up, you should be able to click on the layout here. And then you could say, let's customize it, right? Customize, what do you want to see? Oftentimes, what I want to see in terms of option pricing, I want to see volume, right? So you click in volume, right? You say volume, add item, and then you could also change it to open interest, because that's pretty important if you're looking into option pricing. So last X, net change, volume, and open interest. And I would add one or two, like the delta, right? Delta is the rate the price moves. If it's anything delta of 0.30 and over, there's a higher probability of you being in the money, unless you are too far out. And I'll show you how the delta is calculated. So I also have one more customized, which I last night, which is called optionable, right? It's, I want to see how does it work, right? So this is my custom indicator, and I add that. to the view. What I will do, I will bring it up right here on top between volume or open interest, or you could just put it right next to it at the below, whichever way you feel comfortable. And then you just say, okay, right? Once you hit okay, what it does, it saves your custom setting into the platform. So you really don't have to change it. And I'll explain what the volume versus open interest means. So since we already passed today's date, let me go into the next one, which is the June 5th one. So let me delete this one. Okay, here you go. You clearly see my own setting, right? I have my delta here. My delta's on this row. Obviously bid and ask. If I want to buy, I just right click. But I will quickly explain what does this indicator does. So this indicator is telling you every time volume exceeds open interest, it automatically calculates volume versus open interest for you. So you don't really have to look around and say, hey, what am I looking at? Where the good volume is, or what's the open interest are. So for example, you see this one, right? We have volume of 20,000 versus open interest of about 7,127, right? That's one of it. So that tells you obviously volume is higher compared to the open interest. In contrary, you'll see here where it says volume, right? It's 4,111 versus open interest is 5,086. So it doesn't really apply, right? So this is a good way for you to keep an eye on in terms of which options getting the most traction in terms of pricing and whatnot. And then obviously you see your delta, right? So oftentimes if you go too far out the money, for example, you know, the volatility is 10 here, plus minus, and it's at 320. And if you go to, let's say, 240, look at the pricing. You know, it's cheap, and the volatility, it doesn't really make sense. And your delta is literally, you know, only 0.03 versus a delta closer to the money. Obviously you have 0.36. This would make a lot more sense and highest probability for you to be in the money. So I'll take a pause here quick. Any questions you guys have, do let me know. Unmute yourself, and then I'll go back to how to put the stop loss order into the system. So. Any question, guys? All right. Hey, White, Richard, guys, thank you. Hi, Freddie. Thanks. I see you guys join. Don't be shy to ask questions. You know, it's just us in the group. So, all right. So now I'll move on to the put side, similar to the puts. I think someone has a question. Just joined what I missed. Me too. Okay. So guys, for Rich and Imtiaz, I'll go back quickly and I'll show you what I was explaining earlier into the session. So typically what I wanted to show you guys, how does the, you know, the option chain works and how you could put stop losses. But before we get into that, we want to set up how the option chain should look like. Oftentimes you see, you know, obviously the volatility here. You should try to stick to closer to the money with the delta of 0.30 and over, right? So that gives you a better probability of staying into the money. So once you go into the layout, you can customize it. You know, customize the key items. You could look into obviously volume. Option is volumes important, and then open interest. And I'm sure option interest. Open interest. Open interest. And then we do delta because you want to see what the delta pricing is. You could also do theta, but theta, it tells you how much money, you know, you will lose. I mean, obviously lose based on the theta. So you could add that too. If you want to just type in whatever you want, it's good for you. You think it's good for you and help you. Along with that, you should, this is something I will share with you guys after our meeting. This is a custom code. It shows you that, how you could predict the movement of a volume versus open interest. So I will say optionable. This is my custom indicators that I, worked on and then kind of played around. So I just put it here and I click OK. So what it does, it pretty much tells you volume against open interest. So every time the volume is higher compared to the open interest, it will show you red triggers here. It will kind of automatically turn red, meaning the volume is increasing against the open interest rate. So this is a pretty good indicator that I like to see where we are, and instead of running around looking for a good options.
So question. So I get the red indicator. I get what you're saying, volume greater than open interest, and you just said that that's a good indicator of one that is churning and is getting a lot of activity. So
Right.
Can you explain just a little bit further so I'm perfectly clear what that really tells you and why that seems attractive to you? Just in the context of choosing one that's closer to the money or whatever. I guess I just don't quite understand why that's such a good indicator. And if you could just explain just a little bit further, that would help me. Thank you.
Yeah, absolutely. So I keep this up on the view, right? Oftentimes you see certain strike price gets a lot more traction compared to the either far out the money, or it is getting some kind of volume or some information that's feeding into the strike that we are not aware of, right? It could happen that some news came out or someone's very bullish on certain strike price. So obviously it will tell you, like, right, higher the volume, higher the open interest, it gives you like a solid view, okay, probability of being in the money. Obviously we do not know what's gonna turn out to be in the next week, but we could predict it somewhat, say, hey, there's this one's getting a lot of volumes, like 20,000, 15,000, and you see 14,000. So I usually keep those on watch for me to kind of track what the pricing is moving. So for example, if I come in Monday morning or end of the day, Monday close, and I see the volume is almost 25,000. So traction to see where the strike is hitting the most money. So you're kind of following the money. If you keep seeing the same strike getting, above ask pricing, that means someone is very bullish, or someone is getting, against the call and say, hey, I want to buy below the put. So someone is very bullish. So oftentimes I track those to see where it's getting the most traction. So this indicator kind of tells you, okay, open interest getting higher, volume getting higher. So it kind of filters out the noises in terms of you looking through so many different strike price. So as long as you could kind of identify, hey, these are the ones that's kind of gaining momentum. And obviously you have to do your research, your charting, your trend, and all that other stuff it comes in. But this is just a general sense of direction in terms of where the market money or the money makers are flowing into. Obviously, I integrate dark pool data and any high volume. Apple is pretty liquid. If you look into SPY, for example, I'll show you how the SPY ticker works here, right? Pretty much.
Before you change the screen, I got too late. I had a
I'll go
follow-up
back.
question off of Freddie. I came in late.
Oh, no worries.
But going back to that, so would you say, try to bounce off Freddie's question, would you say since, all right, higher the volume, you want to look at the volume and interest, higher the volume in your, I guess your indicator, I came in late, so I haven't looked at this indicator
That's fine.
or used it as of yet, but let's just say, all right, the 29, which one's this one with the 1.4 mil? I don't even know. The one that has plus 10, I guess.
Right. Oh, here on top.
No, to the left of your screen. It's Yeah, right below it, the negative 10 cent one, right there. Okay, all right. So let's say, are they in? So are they proportional to, or do they respect each other? So the higher the volume, the interest would theoretically increase as well.
Correct. Correct.
Correct. So like you would want, I know that one's just out of the money. It seems like negative 10, but since that one's starting to build up,
So
you would
wait,
look
let me
into
pause
that
you
one.
there for a second. Let me pause you there for a second. What do you see the negative 10 is just a net change that occurred today or for Monday. So you know how a SPY ran up and then it came down. So that's just price change. It tells you how
Okay.
much money it has changed. It has nothing to do with
Oh,
the volumes and everything else.
correct. I'm referring more to the 65,000 via the 29.59.
Right. So you're spotting on this line here. It says
Yep.
so next week, if you follow this, if you put this on your chart, same strike, even if you don't have this, obviously the indicators here, you could come back and on a naked eyes, you could, if you look at this one, you'll obviously see the volume of 65, but you have to look around, okay, where the volumes are, right? And where open interest are. It's just a way of you seeing things more on a lot less noise. For example, look at this one, right? The put option, look at 100,000, 50. Obviously, you come here, you see what's in it and what has the highest one. This one lost about dollar 13 cents because it moved, SPY moved up because this is a put. But the net change occurred, which was $1.13 versus this one. I think earlier, if we looked at it earlier, it would have been probably plus or minus range, most likely in the plus range. But if you look into this one, 306, there's a higher possibility, even though this one has more volume, but you have more chances of you being closer to the money because of the delta. So it's saying every dollar it moves up, you will gain 46.
Yeah, you gain $46. Yeah.
Yeah. So for our dollar is 46 cents, whichever way you calculate it. So obviously, if you have 10 options, that equates to about $460, right?
Yep.
That's where it is. And delta is pretty key, right? I try to stay between, as I was mentioning earlier, above 30. I mean, it's 20, it's still good, but somewhere in this ballpark where you see the most volumes here, right? 45, 65, 42, 32. Like this is a pretty good volume in this range. Even though delta is 14, but obviously, Apple moves. SPY moves pretty frequently now. Before it used to be somewhere always in the $2 range. Instead of this is now look at the volatility, almost $4, right?
Almost $4. Yep.
Yeah, that's what you could estimate either you go into the put side or to the call side. So anytime a moves happen, its volatility is $3.81 up or $3.01 down. So I'll take a pause. I know Freddie, if that clears your question, and then I could come back to Chris.
Yes, it did. Thanks. And just to confirm, volume, does that reset daily, or and then open interest, that's cumulative, right? Or that's the amount that's always kind of out in the market for that particular option, the open interest, right? So if we come back Monday morning, the 65,000 on the 307 or whatever call, is that going to show zero and it's gonna reset?
No.
Yeah, I
It
think
won't reset.
yeah.
It's more cumulative, right? It accumulates over time ever since. So for example, let me show you a clear example. If you go too far out the money, right? So if you just keep an eye, if you go to July, a month out, right? Look at the volume, right? It will stay here, and it will gradually, as the time comes to closure to expiration, it will continue to grow. So you could just kind of see where it's growing or what range. I mean, obviously you could pay $7, almost $8 for July calls versus, this one here, June, you would actually, let me go back to the June 1st, where the pricing is obviously different, right? So farther expiration you go out to, it's more money.
Okay. So volume is cumulative, and open interest just tells you how much currently is out there in the market.
Yeah, and obviously it grows with closer to expiration, or money could be flowing from calls to the put side, right? There's another way of seeing that too. So if you see a lot of 65 went down to like 5,000, obviously the put ratio will probably go up more, or people will take and move on to doing something else. So it all depends what the market, reacts to over time. But we still have, and let's say we have a week, right? So next Friday, I'll probably come in on Monday and I'll see, hey, what's going on with Apple? Do I really want to get in? I want to see what the volume is, where the money coming in. So obviously, if you follow the money, that's where typically it ends up being the price for even, for big guys or for retail traders. This is a pretty good way of kind of, playing your trade. I could go out farther, but I don't know how much money it will value. So every dollar it goes up, you will only gain two cents, which is, doesn't really mean. And at the same rate, you have your theta. So you kind of lose, you know, you've been flat out zero. You gain two, but then you lose two on theta.
Okay.
So
yes. Thank you.
Yeah.
Which indicator is this? Again, I apologize for my tardiness.
No. This is I actually work night in terms of adding to my optionable. It's not out there. But I can definitely share this. I'm gonna share this with you guys after the meeting, right?
Awesome.
Because I wanted to show you guys first before I put it into the script, because it wouldn't make sense in terms of how to. You see the video, you should be pretty easy to kind of add it to your optionable on the script, and it works automatically. You don't really have to do it every time. It works on any frame. If you farther you go out, it will show you where it is. Like, as you could see, all of it. It kind of gains
traction. Does it work for mobile as of yet? Do you know?
No, this wouldn't work on mobile as much because of the deep coding that goes into building these. So oftentimes it doesn't work. I haven't applied to mobile. Good question you ask. It might not do it. I don't think it would, but I'll test it out. Right, I'll definitely test it out, and if it works, I will put it out. But I'll definitely share the code with you guys shortly after the meeting. And then, this is a good way of seeing things. You guys could use it if you like it. I think that this adds value to a trading instead of looking through so many different options and whatnot. Typically, this is when you come in, you see this is the option chain, right? So the goal of this meeting is to kind of really show how we do stop losses. Again, so here you come into ThinkorSwim. Let's say for next, well, this is Monday, right? So Monday is pretty close, and it expires. Obviously, expires every Monday, Wednesday, and Friday. So it's a lot more liquid. The volume is pretty high up compared to the other one. So any given time you want to do a stop loss, right? You say buy, right? You buy it, and this one automatically pops up, right? And this is where it gets a bit tricky. So please pay attention to this section, because oftentimes people tend to miss this one. So when you come here and you want to do a stop loss, right? What you have to do really is click at this bottom here, right? And you click on first trigger all, right? What it does, it creates automatically a second set of orders. So you just come in here and you click an opposite order, right? You see what it did? When I clicked on opposite order, right? It gave you that in case you're buying 10, right? And then you are selling 10 or selling 5 if you want to cut half. And then you come here and you say stop limit, and you put your limit here. Let's say you put it to, if it's 76 cents, you want to go down to, let's say 65, right? And that should be a stop limit. You don't want to lose more than 11 cents or 10 cents to each contract. Does it make sense? I'll stop here, and then I'll go back and repeat it if I need to. But
question. Yes, it does make sense. Do you have to enter in the stop limit before a standard stop loss, or can you just put in a stop loss?
Typically the system does it for you, but that's a defaulted. You could always check.
Oh, okay.
Yeah, it's a default. So as soon as you click it, but even you could do it from this tab, right? If you say buy custom or sell custom, you could do it.
Okay. Oh, I see. With stop limit. Okay, got it.
Yeah. But I prefer doing it sometimes manually. Like, for example, let me delete this one. I'll go back and show you how to do it automatically. So let's say I delete this whole order. And I say here, buy custom, with stop limit. so system does give you something, sometimes automatically, and you just have to kind of play around with it to see where it ends up being, in the system. So it sometimes it gets, complicated if you don't know how to use it for the first time. So I suggest, the first time, if you play around with it, play around with this, I oftentimes, if I'm in a rush trying to get into a trade, I don't even put stop loss. For example, Teslas and all that stuff.
Yeah, that was my second question. Kind of more on the psychology side of it is, I've been finding that, with the volatility, you on that one as an example, you only put it 11 cents to the downside, right? And that sounds good to protect yourself. But at the same time, I kind of feel like you're going to get stopped. People get stopped out a lot pretty quickly.
Yeah.
Is that I just want to know, does that happen to you? And should we just get used to that happening? But that needs to be in place so that we protect ourselves, because I find so far for me, without the stop loss, I've been losing a lot more because I haven't been doing the stop loss and I never know when to get out. And so I'm just curious, is if you just put the stop loss all the time?
No. So
I'm 1,500 down. Trust me, I know that feeling. It's gone.
Chris knows. No, this is a very valid question, and it's pretty strong, right? When to get out. It all depends your risk management, way of doing things. Oftentimes, double top, his name is Harris and myself, we do it at least 15%, right? And then we will do 20% or 30% profit. And I'll show you how to do that here as well. So you come here, right? You buy it, and then you always have to select advanced order. You could do the same thing on your mobile. Chris, I know you asked about the mobile. You could do the same thing. When you do here, at the second section, when you scroll down on your mobile, it will show you create an advanced order, right? So that takes a time to get used to it. Typically, sometimes on $1, $2, I don't really use stop loss, because Tesla could move. For example, if you get into Tesla trade, that thing moves like a monster either way, right? So you will get stopped out. So that's when your mindset comes in. Say, hey, you know what? Screw it. I'm stopped out. I'm moving on. That's what I do typically. I would move on and say, what? We find a better situation. I mean,
I think I just needed to hear you say that does happen. And you just kind of, hey, you protected yourself, and then you can actually buy in if you want to at a lower price whenever you kind of feel that it's stopped from, that you didn't bleed the whole way down. So
exactly.
But the first time you sort of get stopped out a few times, you're kind of just like jolted. You're just like, man, because then you see it bounce up pretty quickly, right?
Yeah.
So I just wanted to make sure that when you start putting more trades, and you've done this for a while, that still happens, and you just sort of just need to accept that.
Oh no, if I do, you live once type of trade, always stop loss, because I know if it goes against my direction, I don't want to lose. That's when I put like very, very tight stop loss, like 15 cents, 20 cents. Obviously, Tesla is a different story, but if I know, for example, SQ or any one of my favorite ones, if I play more often, I know how much they move, right? So if it's any nuances or new trades, new ticker that I have no clue about, and I just want to catch the trend, I would put it at least 20%, 20 to 35, and then just let it run, unless you take in multiple positions on the different tickers, it becomes challenging. So at the same way, that's what I say, always make sure you have that. You come into this here and you say, opposite order. So make sure you get stopped out. And then what you should do here, just change it to based on TD Ameritrade. It says it's better to do stop limit versus a flat out stop, because it will get, kick out pretty quick. So you just say limit, and it change between your bid and ask price. So it will settle in right. Then you could just come here and adjust the price whichever way you prefer. If you do like, 30 cents, 50 cents, whatever, you could just easily come here and click. You could manually do it. Oftentimes on a quick trade, it takes a while. So, it doesn't really make sense. You could just put a stop and just forget about it. If you want to change the time, if you're in a longer trade, you could obviously change it to GTC, which is good till cancel on both. And, you forget about it and you confirm and send it. what the system will do, it will automatically change, when the market's price hits 76 cents, it will get you in because you set a limit. But if you set it at the market, even if it's like $1, it will get you into $1 and you will stick to your stop loss of 67 cents. Does it make sense?
It does. I do stop when I do stop losses. I understand that. I guess I don't do stop limits because I just didn't know what that meant. I just didn't understand. But the stop limit and the standard or the stop are the same thing. Can you explain the what actually happens with
Between the stop and the stop limits?
Stop limit and the stop?
Okay, so you know how bid and ask is pretty wide sometimes.
Yes.
So oftentimes, if it moves, you might get stopped out at 76, right?
67, right?
I mean, no, yeah, sorry, 67, not 7. Yeah, you will get stopped out literally at 67. But if you
on the bid, right? Yeah, on the bid.
Yeah. But in between stop limit, what it does, it calculates between bid and ask, and then it will put you right on the sweet spot. So you don't lose too much of it. So probably even if it's not 67, it probably close you out at 60 cents or 70 cents, depending on the move. But if you have the standard stop loss, right? If it says stop, it will literally stop you market, whatever market price this is market. So you lose some value in there automatically.
So you do like as a matter of practice, you do like stop limit as opposed to a regular stop.
Correct. Because that way you still have your, some wiggling room because you will close you out. As soon as it hits 67, it will close you out.
Yes, that's been my experience. Yeah.
Yeah, so it does that. So that's when you put stop limit, right? There's a lot of detailed videos that I looked at and I explored. What it does, it kicks you out literally at 67 if you have a flat out stop. But if you have a stop limit, right? Based on my discussion with my senior trader from TD Ameritrade, this is the best way to do, because that way you still have some wiggling room. Instead of 67, if they see someone is interested in buying, you could close it at maybe even 70, 72 cents. It doesn't make sense because you
it does, but you don't have to change the second red line, the standard 6.67.
No, that's standard. That's standard. Yeah,
that's standard. Okay.
Yeah. Because if you change it to market, it obviously
it's gonna look like a regular stop.
Yeah, okay. It becomes null to your stop limit. So you just keep it as is, and obviously best, you don't really have to pick an exchange. It's always the one, whichever takes in. And
okay.
You could put this overnight, before you go to bed, whatever, and then forget about it. If it goes in, it goes in. Also, so I think looks like we have about 3 minutes. I'll quickly go over this. So this is the standard stop loss process. If you want to change it to your typical profit taking, right? You want to say, hey, no, I'm happy with $1.25. All you have to do, come here, right? And you change this to your, you would change this to OCO. What OCO does, one cancels out the other, meaning that if price goes up to, I'll show you. So you have to come here and create another opposite order. Create an opposite order, right? So look what it does, right? Give you another order. So in one leg, you are practically doing 3 separate orders and you forget about it. You take your loss or you take your profit. And this will allow you to set it up. I'll tell you exactly how each of it does. So I'll take a pause, quick 2-minute pause or 1-minute pause for you guys to ask questions before I show you how to do the profit limitation. All right, so moving on. So this one, what it does, you just have to come here on an advanced order and change it, right? So for example, this one, you could say, hey, I think 76, I bought it at 76. I think $2.50 is good. I want to put I want to get out at $1.50 or $1.20, whichever is your price, right? That way you're automatically getting out. Still standard, and you just put this as a limit. That's it. You don't really have to do much. There's not much difference to it. You just have to come in and adjust your profit taking, limits. If you want to let it run up $2, $3, whatever, Tesla usually runs, so I don't put any limit for me to get it out the market. I just want to let it run if I'm taking. If you want to set it to 25, 30, whatever your risk management calculation it fits into, you could always adjust it here to the price and just leave it as its limit. So this is the way you could set up, limit in, stop loss, and your profit taken, depending on, how you want to play. So this could be a good measurement. You could just say, confirm, you send it and you forget about it. That's it. You will let it play. But you could also come back and adjust each of it on the tool itself or on your phone. You could come back to the order where it says working order or whatnot, and then change it to whatever pricing you see might fit. Does it make sense for you guys, or you want me to repeat?
Yes, thank you. We're good.
Yeah. Perfect.
Yeah, it definitely makes sense. I just can't believe you guys got to be moving, because obviously if it's in a volatile market, that your bid and ask, your open interest, all that's moving as market's playing. Like
Yeah.
for me, for mobile, it's like boom, it's like I'm in, and then I'm just like looking at the graph, peeking it, and I'm like, all right, cool. Boom. Sell
Yeah.
if it's 20. No, it doesn't. So I definitely need to start using stop losses a lot.
Yeah, so I think I have less than a minute. I might get cut off. Quickly, if you have any question, throw it in the lounge. I'll answer it, but I'll stop the recording here and I'll share the code with you guys shortly after the meeting is over. Just throw the question into the lounge. I think this is pretty good way of doing risk management.